This is the simple bookkeeping system I use every single week in my business. And the order you do this in is actually what makes it work. Because if you've ever sat down to do your bookkeeping and thought, where do I even start? What am I supposed to do first? Am I doing this in the right order? That's the real problem. It's not that bookkeeping is too complicated, it's that no one has ever shown you the full process from start to finish. So in this video, I'm going to walk you through the exact system I follow step by step in order, so you know exactly what to do every week or month without second guessing yourself. And once you see this, you're going to realize this is a lot simpler than it feels right now. Over the past 6 years, I've worked with hundreds of creative business owners. I've cleaned up a lot of DIY bookkeeping, and I've spent a lot of time figuring out what actually works long term. Not just what's technically correct, but what's simple enough to stick with consistently. And this is the exact routine I use in my business every single week. So here's the shift I want you to make. Bookkeeping is not a bunch of random tasks you do when you remember. It's a routine. And once you have the routine, everything else becomes a lot easier. And if you were here for my last video, we talked about whether or not you are able to do your own bookkeeping. This is it. Having this system and knowing exactly what to do and when, and if it's accurate, allows you to do your own bookkeeping without having to outsource it. So let's walk through it. Again, this is what I personally do every week, but if you're not at that consistency yet, that is totally fine. At a minimum, though, you should be doing this once per month, just not once a year. Step 1 is clearing your transactions. This is where you go through everything that's come through all of your accounts and categorize it. And for me, the order matters here. It makes it so much easier. I always want to start with Stripe and PayPal first, then move to clearing your checking account, then your savings, then your credit cards, because those payment processors are where the most confusion tends to happen. And starting there makes everything else easier. So the way that Stripe and PayPal are set up in Xero, they are actually bank feeds. So you are categorizing your revenue, you're categorizing the payment processor fees, and the Stripe payout is actually a transfer to your bank account. Then when you're in your bank account, you can actually match that payout because it's already recorded. Categorizing expenses is also the point where most people get stuck because they don't know where things go. So don't try to figure that out from scratch every single time. I have a cheat sheet that I made just for you. It's actually my most popular freebie, and it has all of the exact categories that we use for our clients. So a lot of our membership students will literally pull it up every single time they sit down to do their bookkeeping and use that to categorize their transactions. I'll link it below for you. Step 2 is reconciling your accounts. This just means you're making sure that your bookkeeping matches your actual bank balances. So you're checking your accounts and confirming that everything lines up. This is how you know your numbers are accurate, because you don't have duplicate transactions, you're not missing any transactions. It really eliminates human error that we would normally see with a spreadsheet, but we really can reconcile inside our accounting system. Step 3 is reviewing your numbers. So you're going to want to run your profit and loss in your accounting software, and sometimes it can be called an income statement, so those are synonymous with each other. Then the first thing you're going to do is look at your profit. That is at the very bottom of the report, because revenue minus expenses equals profit. I like to think of profit as a playground. How much money do we have to play with to pay myself, to save for taxes, to pay off credit card debt, or just to reinvest in the business? That is the one thing that you should know every single month, your profit. The next thing I like to look at is my profit margin percentage. So I am dividing my profit divided by my revenue to see what is that percentage. Right now, I'm sitting at about a 21% profit margin in my own business, which is a little lower than I'd like to see. Normally, I recommend about a 40 to 60% for most business owners. However, I outsource a lot in my business, and I'm okay having a lower financial profit because my time profit is very high. That's the season of life I'm in, and that is very intentional for me. Then we want to look and see if revenue was really high, what caused that? Can we replicate it? And if there's any really high expenses, are those still making sense for our business? Are they giving us a good ROI? Are they buying back our time? And do they still make sense? This is where your bookkeeping actually becomes useful and helps you make really solid decisions based on firm data. Step 4 is checking your cash, because your P&L doesn't always tell the whole story. It doesn't show things like owner's draws or credit card payments. So you want to look at your actual cash position. In Xero, this is called a cash summary report. It's what's coming in and what's going out and what you actually have available to use use in your business. Take the time to look at your overall net cash flows. That's usually near the bottom and is able to tell you whether you have added money to your big money pile in your business or you've taken more out than you've actually made that month or that year. It is okay if that number is negative, especially if you've paid off credit cards or given yourself a really good owner's draw. This is a little bit different for S Corps, so make sure that you understand what basis means before you start taking really large owner's draws. Step 5 is updating your money system. I personally use YNAB, You Need a Budget, and I've been using it for over 5 years for both my business and personal finances. So this is where I go in, categorize anything that needs updating, add pending transactions from my credit card or Stripe payouts. I check my savings, pay off my credit card, and take an owner's draw. You can use whatever system works for you, but having this step is what keeps everything aligned for what cash you have and what it's earmarked for. And then the last step is cleaning up anything outstanding. Follow up on any unpaid invoices from clients, pay your contractors, and close the loop on anything that's still open. Now, here's the thing. This entire process becomes so much easier when your bookkeeping system is set up correctly. This is why I recommend Xero. I use it, my team uses it, and it's what we set up for all of our clients. Because once everything is connected and structured properly, you're not figuring things out every single time, every single month. You're just maintaining a system that already works. And that's what I want you to take away from this. You don't need to know everything. You just need a system in the right order to follow. But even if you follow this exact routine, there are still a few common mistakes I see people make that can throw everything off. So in the next video, I'm going to walk you through those mistakes and some myths that people have about switching to Xero and doing their own bookkeeping. Make sure to subscribe so that you can be notified when that video goes live next week. But if it's already there, go give it a watch.